Hello and welcome to Wyckoff Training Academy. Yesterday, 2 days back, I've introduced an indicator, or you can call it as a trading system. And yesterday I've recorded a video on how this and why this and what is the logic behind this indicator, which I'm. Give me a second. Let me set up my annotation tool. Okay. So as yesterday I uploaded a video on my YouTube channel pertaining to this particular indicator, which is called as Wyckoff tape reading toolkit, along with this accumulation and distribution identifier. Like automatically it identifies accumulation and distribution based on your particular stock or your particular instrument you're trading, and with the like according to your time frame, it gives you an accumulation and distribution zone and the markup levels as well. So this is an accumulation zone, and these are the targets of this markup phase. So this is how, this is the logic behind creating this indicator, and this is the outcome which I was expecting, and for trading any given instrument, either stock, commodity, forex, futures, or any damn good instrument based on Wyckoff. So as you all know, if you people are following along my videos and my post on different forums and different groups, so I'm a dedicated Wyckoffin trader. Yesterday I've uploaded this video and shared the video link in various forums, in various groups. So I got some uh, request from one of the, I got one particular I'll not say request, but it is something which is very closer to me. He asked me about, first of all, he mentioned me as you are a Wyckoffin master. I'm not a Wyckoffin master. I'm just a Wyckoffin student. I'm a student of knowledge. So I believe in learning. Like I cannot, I don't want and I don't like to be called as a master. I'm a student. And though you can say I'm the only one, I think, in the market, you can say trading fraternity, who has tried and who has learned Wyckoff and has practiced Wyckoff for like 15 plus, 16 plus years. I should say 16 plus or 17 years, I should say, because this year might be 17. I'll complete the 17 years uh, practicing Wyckoff. So, like, based on my experience and all this stuff, I learned coding, and though my background is of computer science, I learned particular language regarding particularly on for trading view. This is the Pine script language. So I learned and I tried. I'm the only person in this fraternity of trading uh, who has tried Wyckoff method to be programmed in a such a way that whatever teaching of Wyckoff, the core concept of Wyckoff, or like whatever Wyckoff tried to communicate to the traders, and the way he understood and he tried to understand and try to forecast the market in his own in his own logical way. So he tried to communicate it. So what I did is I just tried and understood and practiced his core teachings and tried to compute it in the best possible manner. So that part, I can take that credit because haven't seen anyone who's coding, uh, particularly focusing or concentrating or revolving around Wyckoff concepts. So having said that, thanks a lot for your if you're considering me as a master. Thanks a lot. I'll take it in a positive way and as a compliment. So thanks a lot for that one. But still, nobody is as far as I believe, we all are student of knowledge. So every day is a new challenge, and especially when it comes to financial market trading, any financial market, every day is a challenge. So if you will or anyone keeps this kind of attitude, then what comes and what will someday or someday or in a coming future, you can be expert to some degree. So coming back to what his particular question was, there were first of all he shared this chart. He shared this stock. I think this is Indonesian or Malaysian stock. I don't know. I haven't been into the detail of this particular stock, but I think he's trading stock. So what he asked me, I'll just hide what my indicators are. So this is a normal candlestick chart with default by default settings of red and green. You all know green means when close is greater than open, and red means when close is less than open. So this is a normal candlestick chart, like which is the default setting of trading view. So what he, I think, let me check with one second, one second. Just give me a minute. Okay. So what he particularly asked about is uh, how to deal with this kind of vertical and vertical acceleration, like drop and then the rise kind of thing. Because this is normally I tried my I tried this to apply chart patterns of different kind. So, but I haven't I was not comfortable with applying it in a longer run. Though you get VW or flag or other kind of patterns, um, but I'm not against of it. But that doesn't that doesn't resonate with me, and I don't find it very uh, practical in terms of trading on like for a longer duration. Longer duration by the longer duration I mean is to make a I'm a full-time trader and a coder and I'm training expert. So I'm trading and training people on since a long time, and I for trading is something which is of a business to me. So first, I'm a trader, then I'm a trainer or a coder, you can say. So I tried many things, out of which was like V or W or inverse something this kind of patterns. I don't remember them, or like all the patterns, but to this is something which he asked particularly in terms of V correction. So what he was asking is, is can we have he was particularly asking in terms of accumulation and distribution. So what he was particularly asking was is it possible for us to do any analysis, any phase analysis in particular, regarding when it comes to vertical correction? So I think this was the area he was pointing out, and he pointed out in um, his message to me. Like he shared the image with me, and he was particular about asking about this particular fall. So I'll what I I had tried straight, I haven't tried point and figure, but though I because point and figure charts were basically uh, useful when there was no data charts or the data type of charts with us available with us. So now we have time frame based charts. So point and figure charts, though it is useful in stocks and forecasting the prices for future and or future price targets, you can say, to be precise. But I think when it comes to time frame based charts and time frame based charts and based on time frame, if you try to apply, like if I zoom in, I'll okay. So if you talk in terms of time frame based charts and if you talk in terms of like applying accumulation uh, phase analysis altogether to the time frame based charts, it's it's not like you will be consistent in applying all the phase analysis in it. The reason being said is like, first of all, let me make it clear. I'm not advocating or I'm not telling anyone to stop doing phase analysis or using Wyckoff schematic. I'm here to simplify things which were like, I'm here to just share things which work for me and blow a whistle when things are not working for me. So, if you're comfortable in doing phase analysis, it's very good for you. And if you're not comfortable with doing phase analysis, and if you're finding it very difficult to apply on a time frame based chart, whether it is monthly or whether it is 1 month, 1 minute or second chart, that doesn't make any difference. So if you're finding it difficult to apply it on the time frame based chart or any other chart type, so like that means you are with me, like you are facing the same issue which I faced, and which is the reason I stopped using the schematic. The reason being said again is if I like just to simplify it, it is not practical. So applying a schematic on any uh, time frame based chart, whether it is stock, futures, commodities, or any damn good instrument which you're trading, it's very difficult because reason being said, I in my yesterday's session I mentioned it. When you're trading on a like if you're a swing trader or a day trader or a long-term trader or a short-term trader or whatever kind of a trader you are, you would be focusing. There would be one time frame which you would be focusing more on. So like if I'm a day trader, if I consider my example, I'm a day trader. I like to watch market on 5 minutes and 15 minutes, and this is the 80% of the time, like 70 to 80% of the time, I'm observing market on 5 or 15 minutes. So what I'll try to do is I'll try to understand market and what it is doing. If I apply what different Wyckoff principles, so what I'll be looking out for is um, getting a best possible situation, a high probability situation to get my trade aligned with the trend and initiate my trade and exit with profit. This is what a normal trader would be looking out for. So I'm also same. I'm also trading with the same logic and same principles. But the reason being said is the reason which differentiate me from other people is I'm not using schematic. The reason for that, as I mentioned earlier, if there is a schematic, then if this is a distribution or this is an accumulation or either of anyone, how would you do the phase analysis? Because there has to be a buying climax. There has to be a selling climax. Like when it comes to distribute accumulation, there has to be a selling climax. But if you're trading on this particular daily time frame, how would you differentiate or how would you recognize this is a selling climax or not? Okay, I haven't applied volume. So what I'll do, I'll apply volume as well to this particular chart. And then, so now I have applied volume to this chart. So if this is a selling climax, was there any volume which was or which you can identify, which you can say this is a selling climax kind of a thing? Here it was a ultra high volume or you can say heavy volume or whatever you want to name it as. So this is a selling climax, though it is not a selling climax. It's not a climatic bar. Climatic bar, as per definition, we all see like what we all like to say is like it's a widespread bar and blah. What are the like other parameters we look out for whenever it is for like assessing whether this bar is a buying climax or selling climax, whatever, either of any. So same goes for this particular bar as well. So this is a widespread bar, but there is no volume. So how would you say this is a climatic bar or this is a climatic move? So these are the lacunas or these are the gray areas which a Wyckoff trader faces. And over the period of time, if you're consistent with this methodology and if you're trying to apply it, then only then this thing will start making you more curious to how to cater to this particular problems. So that is the reason, like I have the reason why I always say I have 15, 16 years of experience. The reason for this particular thing, stating this particular statement is simple. I have seen many live hours of market wherein I had faced same problem which you might be facing or after 5 years you are about to face. So I'm just a whistleblower, that's it. Nothing more than that. So as per the today's discussion, or as far as today's discussion is concerned, I would be focusing more on like accumulation and distribution. So first of all, my take on accumulation and distribution is straightforward. You cannot find out accumulation and distribution. You might be like if you're trading on a daily time frame, you might get a phase analysis like this is a distribution phase. For me, it's a distribution phase. There are some parameters wherein I can say this particular stock, like in between of September and November, like or beginning of October, you can say, or end of the October, you can say it gave us a cumulative distribution phase, and which began in September and ended in like by end of October or mid of October. So this is a climatic bar as per the book's definition. This is the arching of price, and if you draw either this way or this way or this way, so preliminary supply or whatever you want to call it as like I forgot the uh, definition of it. So automatic reaction or automatic reaction, then a spring, a fail of spring, then a upthrust, secondary test and upthrust. This is upthrust after this particular distribution, and then prices coming down. This is last point of supply or support or whatever you want to call it or whatever you want to name it. So this is how a distribution would look like. But if I look into this particular situation, remember from September till end of October. So, and if I move my chart towards my left, because as we all know, being a logical trader, we all know what happened in his past will repeat itself. Though there are many novice traders, there are new beginners who don't buy this say, but eventually you have to accept this reality. Whatever has happened in past will repeat itself in future. So viewing the market in the hindsight of like what happened in past would make you a better trader in longer run. So having said that, if this is a distribution zone where I can say this distribution and how I can say this distribution ended over here. So this is the question which that gentleman asked or that person asked to me. So how would you identify this particular vertical price acceleration as distribution or accumulation? You can't. Nobody can. So there is no sense in banging your head against a wall, against a wall because you will bleed. It will bleed you out. Nothing more will happen, and you will get yourself injured. So instead of raising questions and raising doubts or becoming confused, how to do this thing? Because this was my approach. I was of the same opinion and same question was where like I was coming across same questions, why this, why that. So there is something which we cannot define, which we have like uh, how like just in a simpler way, we cannot gauge the market, or we cannot analyze the market to its fullest extent. Like we cannot assess the market 100%. Though there are many different methodologies there are many different traders who claim to do the analysis and do the capture the market to its fullest extent, or to their fullest extent, like to 100%. That is not possible. So I may sound like weird to you, but this is a real fact. You know, if you are a practical trader, and if you are honest with your trading, and if you look at trading as a business, you cannot feel like you cannot say to yourself that what I'm doing is 100% correct. 100% I'm going to analyze the market. No, that is not the fact, and that is not going to be the case in your entire life. You cannot do this. That is not possible. At least till this particular day, it's not possible. What you can achieve is 70%. What you can achieve is 50%. Or if you're a seasoned experienced guy, or you can achieve it 80 or like 90%. This is something which I'm talking about, which is way beyond a normal IQ guy uh, capacities, like normal IQ guy's capacity. So if this is the distribution schematic, though it is like distribution schematic, where is the accumulation schematic? This is a V-type correction, and price went upwards. Price reached this particular level, failed to hold above, and again, if you see, if this is what you're talking about, a climatic bar, or either this could be a climatic bar, preliminary supply, upthrust. There is no upthrust after distribution. There is a secondary test, primary test, whatever, like secondary test, then again a secondary test. So this will make you very like, and the if I say this is not possible, then there is one question which should be, uh, uh, which I think, which would be, if you're watching this video till now, so this question would arise in your head. If if you might be asking to yourself that if this person is telling this kind of thing, it is not possible, then why Wyckoff has come up with this kind of schematic? So my answer to this is what I have discovered over a period of time. At the time of Wyckoff, there was no time frame based charts. What he used to do, he used to take the readings daily based on his access to tickers or ticker tape. So based on that, he used to make the chart based on the price. There was no time frame constraint to the price. It was only purely price. Later on, we got volume. So his access, he used to draw based on price, and he used to get the quantity. So if you go through the basic course and basic training, or like original course of Wyckoff, which says about like there is no mention of volume, because there at that particular time there was no volume, and still at that in that era nobody was disclosing the exact quantity. So this is all hidden quantities, because smart money or composite operator will not reveal his actual quantity. So having said that, so what he came up with is based on his uh, like uh, whatever data he was getting at the end of the day, he planned and he made the chart and he made the schematic. What is practical in this particular schematic is jump across the tree and following through the ice. If you consider this as to a moving average, if you consider this as to be a moving average, then either 20, 10, 50, 100, 200, whatever, 500, whatever, whichever thing you're using, or whichever time frame, whichever moving averages you're using. So The bounce, you can say, if you're acquainted with moving averages, then you can assess, okay, I'm into a phase wherein there is uh, distribution taking place, or there is an accumulation taking place. As this is jump across the creek and this is falling through the ice. So how I like what I understood based on this two schematic. So there is one thing which resonated with me is that what Wyckoff is trying to say is there is an exchange of hand taking place between supply and demand. That means if this is a accumulation schematic, there would be heavy selling taking place as well as there is heavy buying taking place. So if a person is if this is a $100 mark, just for sake of discussion, and this is a $200 mark. So whatever execution of or whatever quantity is being sold is getting absorbed over here. The because absorption always, like we all refer absorption taking place at the resistance level. Here I'm talking about the supply or the selling, whichever the quantity is being sold over here is getting buyed by someone. So if I follow this, if this is what I uh, like it all of a sudden I got like you may say this kind of understanding when I was going through schematic every day. Because unlike any schematic trader, I was also highly excited and highly enthusiastic, so that I may catch a bottom and I may get a fair value and I can make a money like around 1:20, 1:30, 1:40, 1:50, so or 1:100 or more than that. So even I also thought in the same manner, but that didn't happen because if I get this kind of if I was able to get this kind of schematic, if I'm trading stock, so in a long like stock can be hold for like only longer position, like when we are opting for buy, we cannot sell it. At least in my region, I cannot sell it for longer duration. I can only buy because going long for or buying for longer duration can only make money for me. So then there are thousands of stocks in the market. How can I analyze each and every market, each and every stock? So that was and doing a Wyckoff analysis takes it is a descriptive method. It requires your intellect and it requires your brain muscles to be stretched to understand the market. So having said that, so I understood this entire phase of accumulation, what is taking place in this particular accumulation, exchange of hands, or exchange of power, or exchange of contracts, or exchange of ownership. Like sellers are selling and buyers are buying. So this particular idea, this clicked in my head, and I started looking at market in this manner. So same goes with distribution. Distribution occurs when somebody's selling and somebody's buying, or somebody is buying or somebody is selling. So this kind of thing happens every now and then. So there would be buyers as well as sellers in both the accumulation distribution, and sellers and buyers. So this kind of activity will lead you in swelling of volume. This is first thing which I identified. So when we are in a contraction phase, or when we are uh, this gentleman which who asked me this question, he asked me about why I am very comfortable. Everyone is comfortable with flat market, or you can say sideways, or you can say in a range. why but we are not comfortable in doing vertical analysis or when price is falling or rising in a vertical acceleration. So or how why we cannot identify this kind of market situation. But the reason is that simple. If you're able to identify this kind of situation or this kind of situation where volume is and price is not behaving in accordance, then you can identify it when there is vertical price acceleration as well. Either ways, price is falling or price is rising, that doesn't make any difference. The only point you have to look out for is if there is a volume, and if there is, and is there any uh, like if they are going in sync or not. If they are not going in sync, that means there is something taking place which is against, or which like smart money or composite operator is planning for something which is about to change the trend of the market, or which is about to change the direction of the price. So like I'm trying my level best to be very precise and very concise in my say, because there are many things which I have to say, but due to time constraint, I'm trying my level best to make the things as simpler as possible. Though I conduct a very long course on like how to deal with schematics and all this stuff, so I cannot be that much I cannot explain it in very detail. But this is what you will understand what I'm trying to say. Is every if there is price contraction or any price is getting constrained, or price is very freely flowing towards one direction, either upwards or downwards, and there is some difference, or there if volume is not in favor of price action, and price and volume are not in sync, that means that particular portion or that particular area or that particular price area, to be specific, is there is something which is going in behind, and there is some interest of composite operator or smart money or whatever you want to name them, they are planning for. So the chart which you shared, which you asked me like about this particular chart, so I have developed an indicator based to cater to this particular thing. This indicator was this one. I think many people have opted for this one. This is the recent one which I have updated. So why I have updated this indicator? The reason being said is simple, because I want to analyze market like Wyckoff used to do in those days. So what I'm looking out for, like if I hover my mouse over this particular triangles, I'll see there is weak demand. That means though if I for example which I the things which I mentioned you earlier, like in the beginning, if you see this particular candlestick chart, this will show you green, this will show you red. But where is the area wherein, or where is the price area particularly wherein there is lack of interest by the sellers or buyers? How would I identify, or how would I come to know about that particular area? So for that particular purpose, what I did is simple. Once again, I'll just change the setting of the chart so it will be clear to you what I'm trying to emphasize on. Once again, this particular chart I made particularly, or this particular indicator which I'm about to show you is Wyckoff table reading tool, is catering to all the needs which I had, or all the queries which I had in my head regarding this one key, how I should identify accumulation and distribution phase. So now this is whatever you're seeing is a hollow candle, as only black boundaries or black wick top and bottom. So if I change this to, if I change apply the bar colors to it, and now you can see This is a supply. Now this was green. I guess this was green. There is weak demand. If you see the difference, if we are coming to a top position, I mean, if we are coming to a area wherein there was or there is or there is there like in previous history there was a support resistance, or we are coming near to the resistance, and if you're seeing there is weak demand, that means we are not going to there is no whatsoever fuel in the Malik in this particular market to take the price, or in this price at this particular time, to move higher or at least break this resistance, which is at this particular point. And if I see over here, this is supply. This is supply means this is a widespread bar, and it is coming and then price is plummeting downwards. So what normal people will say that this is selling, and we are going to see prices on a lower levels. But all of a sudden, this says demand and supply imbalance. That means there is this selling is present, but somebody is buying this market. So if I say at this particular point, uh, that somebody is buying this market, there has to be some evidence that there is really buying taking place at this particular price level. So here you can see there is weak demand. After a demand supply imbalance, and which is followed by us pure supply, and we are getting weak demand, and then which is it is followed by a supply, and all of a sudden this if this is supply, then I'm expecting price to in coming days price to go downwards. But all of a sudden I'm seeing a weak demand. That means smart money was buying this market as everyone was selling away. So buying doesn't start in one go. Or you can say price is coming down, this is buying, price is going upwards, this is supply or selling, price is coming down, price is going up, down, and so on. This thing will not happen. What will happen in either ways? There would be buying taking place at this particular point, there would be buying taking place at this particular point, and there would be buying taking place at this particular price, and again at this particular price. So for me, buying has started from this particular point. I'm just trying to explain things. Huh? I'm not going through this particular entire uh, this entire stock on this time frame. I'm just trying to convey my understanding about how I uh, or like how I was troubled with schematic, and how what solution I came up with. So this is how this is entire this entire phase is, or this entire thing is accumulation. So the question which you asked is how to identify vertical acceleration and vertical price fall, like uh, fall and rise, that too in a V pattern or a W pattern or any pattern you say. You should be able to understand whether if this is supply, and if this is supply, why this thing is happening, and that too on a particular price level. The reason for using vertical areas or horizontal support or resistance levels is the reason for why I consider this horizontal support or resistance level, because there is price rejection, liquidity areas, or whatever you want to call it. Like in term normally ICT or SMC or smart money concept or demand and supply people, they normally call it as liquidity areas. So this is something which interests smart money. This is for sure. And most important, what I have understood and like by support and resistance is these are the areas wherein price will always be get tested. So if this is in price band or price area 31999 or 0.992 is an area of interest which would be tested, then being a like being a smart trader, I would like to get enter, and I would like to see how it is price respects and how volume responds to this particular price level. So that is the only area, that is the only reason uh, I personally use smart support and resistance. There is nothing like I just buy on support or sell on resistance. I look for a struggle between price and volume, or like if they are struggling against each other or they are in going in sync with each other. So sorry if I made a um, if if I made a longer explanation for your simple question. But this thing cannot be explained in a simple yes or no manner, because trading is complex. It requires your intellect, and especially trading for based on Wyckoff, and requires your mental, you can say mental intellect and mental uh, reasoning to be, or you have to be very rational and you have to be very logical, and you have to keep on asking questions to yourself if you want to trade based on Wyckoff. And why Wyckoff? Why do this much of exercise for just earning, for earning from trading? The reason being said that is Wyckoff. I've tried the GAN and everything, every Elliott, GAN, Fibonacci, and very all the things I've tried it and tested it in market, because I also have the same thing and same concerns and same dreams like any other trader, to be consistent in my profits. So what I found out is there is only Richard D. Wyckoff's work which will make you consistent earner if you understand what his logic is, what he is trying to do, and what he did in his time, and what we can do with the help of his logic and with the help of this particular tools which are available with us. So if I offended someone, if something I said doesn't resonate with you, I'm extremely sorry for that. But that is, my friend, that is the truth. You cannot deny it. If you're using SMC or any ICT concept or any or like any box theory or any Dow theory or anything, you cannot, if you are consistent, if you're able to understand what the price is doing in terms of volume, or what volume and price is doing together, if there is demand, 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 if this is selling, it started from this particular point. For me, selling started from this particular point. And this is not a surprise for me that price is coming downwards. And if this is, if this was to happen, this was the area wherein price started, or smart money started accumulating. And this is the reason normally we'll always we'll see there is great uh, a big red bars, and there in the beginning of an uptrend there we would see this kind of weak demand kind of bar, because this is an area wherein retail traders or traders like you and I are getting into the market. And this is a testing phase taking place at this particular point, because everybody knows about light volume test, but no one, there are few people who understand testing can take place on heavy volume, because this testing is always uh, you can say is done by smart money or composite operator to check whether there are people who are trying to take this market downwards or not, or are the retail traders interested in taking this market down. As the price, as the retail traders get enter in short position, they started buying it. And again, you can see, like by this, you can make out there is demand, there is supply demand imbalance. That means there is something which is taking place, and there are certain entities or smart money is trying to absorb all the selling. And after that, we see this bar eating away all the supply which was taking place over here. And if it is reconfirming what we have analyzed over here, that smart money is trying to absorb all the selling, and this is the way market went upwards. So this is how I analyze the market, and I'll not get into this detail because it will take around 2 or 3 or 5 hours to do the analysis of this particular chart. But I hope you got the fair idea. If I have answered your question, then thanks for asking me. And if not, then you can drop me a message. I'll try to make another video to make it more understandable and more logical for everyone to understand. Again, I'm not against any kind of trading. What I'm here, what worked for me, I'm trying to just pass it on to you so that you people might be able to take some benefit out of it. Okay. Bye bye from thanks a lot for watching this video. And if you have any concerns and doubts, and please drop me a message. I'll try my level best to make a video or try my level best to reply you on the like through that particular forum or particular group. So thanks a lot for watching this video and bye bye from me. And one last thing, I would be uploading bar replay session for this particular indicator of mine which I have introduced, which is basically designed for uh, identifying accumulation and distribution zone. And like for example, in this particular chart, I'm using a long-term tape reading toolkit. I haven't changed the name of this in particular indicator because it is keep on, it is every time changing the name will make everyone confused. So I'm just keeping the name same, tape reading toolkit. I'm just upgrading the version 158. This will give you less, like this is an accumulation zone, or this can also be a distribution zone. Depends which side the market heads. But um, as you can see, if this was 23,550 was the level and 23,750 price, this price made the low of 23,850, I guess, right? 23,850 was the low, and this was my particular price. Uh, so whatever markup and markup, this as I mentioned in earlier in my video, this is markup. So whatever the targets I've given in this particular this indicator or system, that would what I've seen once this target are achieved, either they can access the support or resistance. So in coming videos of um, bar replay, I'll show you how this things works and how this thing prints, what is the delay or decay or whatever you want to call it happens in real time market, so that you get a fair idea how to use these things. If you're opting for this one, you can opt from till Monday or Tuesday. I'm extending it till Tuesday, and you can opt for it if you find it useful for you. Again, thanks a lot for watching the video, and just be connected and keep on asking questions because that is the only way we can learn. Okay, bye bye.